So Figma just dropped a historic quarter, blasting past a billion-dollar revenue run rate, and it's all being supercharged by a massive push into AI. But here's the catch. Underneath all that amazing growth, there's a billion-dollar paper loss, and costs are climbing. So the real question for any investor is this: can Figma's AI gamble keep this incredible momentum going and actually justify its sky-high valuation, or are the risks just piling up too fast? All right, let's break it all down.
You really have to start with this quote from the CEO, Dylan Field, because it just sets the stage perfectly. He's not just saying it was a good quarter, he's calling it a landmark, the best in their history. That's a ton of confidence from the top. So let's see if the numbers tell the same story.
And here's the headline number that got everyone talking. Q3 revenue of $274.2 million. I mean, this just blew past their own guidance. And get this, it was the single best quarter they have ever had for adding new revenue. Ever.
So what does that look like year over year? Well, it's 38% growth. You know, in today's market, seeing that kind of sustained momentum is exactly what you want to see. It really tells you the core business is absolutely firing on all cylinders.
Okay, now for what might be my favorite metric for any software company, net dollar retention, a staggering 131%. So what that actually means is their existing customers aren't just sticking around. They're spending 31% more money with Figma than they did last year. That's huge. It just screams sticky platform and shows their ability to upsell is on point.
All right, so those are the big, shiny numbers. Now let's dig a little deeper and deconstruct the financials that made this a truly record-breaking quarter. And yeah, this chart just says it all, doesn't it? You can just see that steady, relentless climb quarter after quarter. But look at that last bar for Q3. That's not just another step up. That is a massive leap. It's the biggest single jump in revenue they have ever posted.
All right, but hold on. This is where things get interesting and where a sharp investor needs to pay attention. On one hand, you've got a GAAP operating loss of, wait for it, $1.1 billion. But right next to it, a non-GAAP operating income of $34 million. What gives? I mean, that's a gigantic gap. We absolutely have to understand what's going on here.
And here we go. This table lays it all out. The whole difference boils down to non-cash charges. And the main culprit is right there at the top, over $1.1 billion in stock-based compensation. So the key takeaway here is that this isn't a cash loss. The non-GAAP number gives you a much clearer picture of the actual underlying profitability of the business itself.
Okay, so we've established the business is profitable at its core. So what's actually driving that insane top-line growth? Well, it really comes down to two big intertwined bets Figma is making: AI and its all-in-one platform strategy.
And you have to hear how CEO Dylan Field frames this. He's not just calling AI a cool feature. He calls it a fundamental tailwind for the entire company. His whole argument is that as AI automates the lower-level stuff, like coding, the real value, the human creativity, moves up into the design phase. And guess what? That's Figma's home turf.
And they are not just talking about it, they are going for it hard. On one hand, they're partnering up. They've got this new Figma app for ChatGPT, so you can literally just talk to it and create diagrams. Super cool. On the other hand, they're buying companies like Weavy to build out their own pro-level AI tools from within. So it's a classic build and buy strategy.
And that brings us to the second pillar of their growth, the platform. The whole idea is you can do everything, from the very first spark of an idea to the final product without ever leaving Figma. That creates this powerful, incredibly sticky ecosystem. And you can see it's working when giant companies like Flipkart, a massive e-commerce player in India, are renewing their big enterprise deals.
So the top-line financials look fantastic. But you know me, I always want to look under the hood at the customer metrics. That's where you really see the long-term health of a business.
And wow, this chart really shows their enterprise strategy is paying off big time. Take a look at the customers paying over $100,000 a year. They added 140 new ones this quarter alone. Now that's a huge jump from the 88 they added just last quarter. So we're not talking about small startups here. We're talking about big, serious companies going all in on Figma. And this is why that whole platform strategy is so critical. Think about this. Over 70% of their customers are now using at least 3 different Figma products. The more of the platform you use, the harder it is to leave, right? It all ties back to that amazing 131% net dollar retention we talked about earlier. It's all connected.
Okay, so an absolutely incredible quarter is in the books. Fantastic. But we're investors, right? We are always looking ahead. So let's talk about what the company is projecting and, just as importantly, the risks we need to keep on our radar.
So, no surprise here, given how strong Q3 was, management went ahead and raised their guidance for the full year. They're now officially expecting to break $1 billion in revenue this fiscal year. That's a huge signal of confidence that they believe this momentum isn't slowing down.
But, we have to be realistic. It is not all smooth sailing. We went through their official filings and a few things stand out. First, most of their money comes from outside the US, which, always adds a layer of global risk. Second, any big acquisitions they try to make are going to be under a microscope from regulators. They definitely learned that the hard way with the Adobe deal. And finally, all this cool AI stuff, well, it's expensive. The CFO came right out and said it's hitting their gross margins and will affect cash flow for a while. That's a real cost to watch. All right, let's bring this all home. When you put all the pieces together, what's the bottom line for an investor looking at Figma right now?
Look, the bull case is really straightforward and honestly pretty powerful. AI is acting like rocket fuel for their growth. It's pulling new people into this platform that's already super sticky, turning Figma into the mission control center for product development. If this vision plays out, Figma becomes a truly essential, can't live without it tool for any company building a digital product.
And that brings us right back to the question we started with. There is absolutely no doubt their AI strategy is working and that growth is accelerating. But that growth has a price tag. We're talking higher investment costs, pressure on margins, and very real international risks. So here's the question I'll leave you with. Can Figma keep this incredible pace up and execute well enough to justify what is, let's be honest, a very premium valuation? That right there is the billion-dollar question.